People think the next financial crisis could come from something called private credit. In 2008, the world economy crashed because of bad home loans. Banks gave loans to people who couldn't repay them, packed those risky loans together and sold them like safe investments. Then Lehman Brothers collapsed and the whole world suffered. Now, in 2026, many experts are seeing a similar pattern again. But this time, it's not about houses. It's about something called private credit. Imagine a company needs a loan. It goes to a bank. The bank says, no, too risky. Then another company steps in and says, fine, we'll give you the loan, but the interest will be very high. That is basically private credit. Loans being given outside traditional banks because banks became more careful, but private lenders became more aggressive. Today, this market is worth more than $2.1 trillion, and now some investors are getting nervous. Why? Because more companies are struggling to repay these loans, and some big financial firms have already started slowing down withdrawals from investment funds. So in simple words, people are trying to take their money out, and firms are saying, wait, that's where comparisons to 2008 begin. Back then, banks kept delaying the problems instead of admitting losses, and critics say something similar is happening again. There's even a Wall Street phrase for it that says amend and pretend, meaning a company cannot repay its loan, but instead of calling it a bad loan, lenders extend deadlines, change conditions, and pretend that things are okay for a little longer. That may buy time. But critics say it doesn't solve the real problem. Now, here is why this matters globally. Some experts worry that retirement money and pension-linked investments could slowly become connected to these risky markets. That's why major investors like Dimon and Jeffrey are warning people to pay attention. Now, does this mean another 2008 crash is definitely coming? No, because banks today are stronger than they were in 2008. Rules are stricter, governments are watching more carefully, but the fear is this: whenever too much risky debt builds quietly in the background, people remember what happened last time. And if something breaks in America's financial system, the impact won't stay in America. India will feel it too. Foreign money can leave markets, the dollar can rise, oil becomes expensive, inflation increases because today every economy is connected. And the strange part, most people still are not talking about private credit. They are busy watching stocks, crypto, or viral headlines, while one of the biggest money markets in the world quietly keeps growing bigger and riskier. Now the real question is private credit a smart new financial system, or 2008 wearing different clothes? Comment below, follow for more such geopolitical updates, and subscribe on YouTube.